Hi guys, welcome back to my channel. Today I'm showing you guys this strategy I've been using that have been paying off. Okay, I've been using this strategy for a while, and it's one of my strategies. Okay, so I'll share this strategy today. I think I've done something like that before, and again I dropped a video yesterday, and in that video we discussed how to identify key levels on the charts. All right, it's very important you know how to identify key levels on the charts. But in today's video, I'll be talking about this signal I just gave today to my people. I just gave to my people, to my VIPs. Okay, so I'm giving out this strategy for free. So please smash the like button, subscribe to this channel, watch the video to the end. All right, so what's my reason for this sell signal on VIX 50? All right, so yesterday I tried selling VIX 50, but we lost VIX 50. We didn't make profit from it. We lost, like, from VIX 50 yesterday because we tried selling it here. I saw this stuff, but my friend was like, it will sell rather. I saw this stuff, I saw this structure, and it was somewhere here. We started selling somewhere here, and I know that this level is a key level. I told him, bro, it will not sell. He said it will sell. I said, okay, fine. Since we had something like this, we had something like this, we had something like this. So it was thinking the trend that it will continue going down, but I wasn't too certain. So that's why I did not even risk big. But then we lost money. We didn't make money from VIX 50 yesterday, but today looks like we are making money from the VIX 50 already. So he has to pay back what we what it took from us yesterday. All right, it has to pay back. As you can see, we are running good profits, and I risk a bit big on this setup. All right, now why did I give the sell call? Because if you look closely, you see that this is an uptrend, bro. This is an uptrend. So why did I sell instead? This is an uptrend, right? Market is going up like this. Some people say it's an uptrend, but I'm saying something else. All right, let me break down. I'll delete everything out from here and then show you guys my reasons for this trade. All right, so let's go. How's everything, guys? Drop your comments. Tell me how trading is going, how the trading is treating you, what you think you should do differently, or I didn't mean you've done this differently, you'll be getting a different result. Okay, drop some comments. Let's talk. I'll come into the comment section and answer questions and communicate with you guys, interact with you guys. Okay, so trading is not easy. Trading is not easy. Trading is really hard. Okay, so don't align, but I tell you trading is easy. Trading is easy. It's only then how to analyze the trade that is easy. But to actually make money from trading is such a big deal. It's really hard. Okay, to make profits from trading is really hard. Why? Because it's a game of numbers. Okay, and it's a mindset thing. So it's hard for you to just do analysis and make profits, right? It's hard for you to just do your analysis and make profits. You must know the numbers, how to manage your money, how to manage your trades, and how to manage your emotion. All right, how to manage your emotion, your trades, and your money. So those three things are really important. It's not just about doing the analysis on the chart, it's beyond that. Okay, so that's why it seems it's hard. So you need to focus more on psychology and risk management. Okay, it's very important. So now, why did I give VIX 50 sell? Like as always, I move down to my daily time frame. Move down to my daily time frame. On my daily time frame, we want to see our key level. We want to see our key level on the daily time frame. You can switch to line charts to make it very easy. You can see when I switch to line charts, I only have the actual price. But when I switch back to candlestick, it's a bit complicated. It's hard for me to actually know where can I place my zone. All right, you can see here we have a lot of wicks and makes it really hard. Even when you come to this side, it's really hard. And also it's hard for you to actually see the structures well with the candlesticks. So, but if you can involve your you can include your, what is it called, your sorry, if you can switch to your line charts, you see it clearly, very clearly, and also know how to go about it. So now if I switch to my line chart, I can tell you that this is our structure right here. This is our key level right there. You can see that this is our key level. That's the key level. You can see market reversed here, and reversed here, even around this level. So here's a key level, though it's an unfresh zone. Okay, the zone is not really fresh. Okay, so let's switch back to our candlestick. Look at that. You see the accuracy. See why market reversed here, and I'm here again today. So you see the accuracy makes the work very easy. So now I've identified my key level already on the charts. This is my key level, guys. That's my key level. So if I already identified my key level and I know it's on the daily time frame, and market has been respecting this zone for a while. 1, 2, 3, 4, 5, 6, 7, or call it 6 times. So that's the key level on the charts. So what do I do again? Now I want to understand the market, what is happening in this market. You can see yesterday, market started pushing from here really hard, okay, into this point and closed like this. And then today started moving really fast. Now it has gotten to a daily key level. So you cannot just move beyond this level like that. It has to pause for a while. So if it pauses for a while, there's a structure here. I think it might want to come back to this level here. If I switch back to line charts, you can see that there's a structure here that market might want to drop back to this point before making the next move upward, if at all. Or it might want to do something like this. You can see we were going down, then there was a push up. It might want to do something like this, or even below. All right, so that's what I'm saying on the daily time frame. Remember, on the daily time frame, you need to come up with a story, something that will guide you when you go below to know what to do. All right, so now I've gotten that story. What's the next thing to do? I have to go back to my 4 hours time frame. 4 hours time frame. All right, so, and also there's a structure here too. There's a structure right there. There's a structure right there. Okay, so let's go back to the 4 hours time frame to see what is happening. The trade is moving really fast, guys. Okay, so the trade is moving really fast. Now this is our 4 hours time frame. 4 hours time frame. On the 4 hours time frame, we can see that we have this structure right here. Can see that structure and another structure right here. Now you can see 4 hours time frame closed below the structure. Closed below the structure. There was a rejection and closed below the structure. That shows that we are, that shows that we are in a good, the market is actually trying to reject going upward. Okay, so now you can see this is, to me, somehow a pullback. It's just like a pullback. All right, market was going down, then a pullback to confirm the final move, to make the final move. Okay, so market might keep on going down to this level. Okay, might keep on going down to this point. All right, so that's what I think might happen, is probability. All right, so you can see a rejection and close below. That means that sellers are in. So now let's switch down to 2 hours time frame to see what is happening on the 2 hours time frame. Now on the 2 hours time frame, we can see we have a reversal candlestick right there. This candlestick. When you have this kind of candlestick on a key level and it rejects and closes like this, the market's mostly reverse. Okay, it will reverse, it will start going the opposite direction. All right, so I've gotten like 3 or 4 reasons. Remember, on the daily time frame, we've gotten the key levels, and we created a story that markets might want to pull back. I mean, maybe this is a pullback and markets might want to go down for a while, and then market has been going up for a long time. It might want to pause and consolidate for a while. That's where we be able to take advantage of the market and make profits, right? So 3 reasons. Now the 4th reason is you see on the 4 hours time frame and the 2 hours time frame, market close below this structure. And again, on the 2 hours time frame, we have a rejection, a serious rejection, and a reversal candlestick. So we've gotten like 5 reasons why we're taking a trade. That's how I do my trading. I need to have 4 to 5 reasons why I'm taking a particular setup. Now, after that, what do we do? So there's this strategy that I know that I've been using once in a while. Like I told you, I use the strategy to take this trade. The strategy is like this. I've done something like that before. We have what you call a sweep. We have a movement like this. There's a sweep. Market give us that structure. Then we have something like this. We have something like this, and market goes down for a while before it goes back up to this point and make the final drop. Make the final drop. Okay. Market gives us something like this. All right. So you have something like this level. Market will do a manipulation. It will give us a structure here, then come down and do as if it's coming back to this level to create a double top and drop. Some people start selling the first guys will start selling from here, and the market goes up above them and take their money. And then it comes inside. When it comes inside, there are some buyers that want to, normal retail traders that does not observe liquidity. All right, the market will come inside. They want to buy from here because there was a break of this level. Okay, because there was a break of this level, they want to buy from here, and the market will trick them and come below. As it's coming, they might want to buy here again. The market comes inside. All right, so after that, the market will now come up again, give us a structural liquidity. So we have sweep of liquidity, protected high or strong high. Then we have a transactional liquidity where market comes below this level, break this level. All right. Then after the transactional liquidity, market comes up to give us structural liquidity. After structural liquidity, market comes back again to give us the second transactional liquidity. After the second transactional liquidity, market goes into this point, and as it's coming to take out this level, this structural liquidity, to take out liquidity here, because a lot of people see downtrend. So when it's coming up, it will trick them. They will want to sell from here, so it will continue going down, but the market goes in and make the final drop. So this is where you're selling. This is your POI around this level. Your POI is around this level. So this is the strategy I use, and you're selling somewhere here. All right, when you see your 3 candlestick formation, all right, you guys should be familiar with the 3 candlestick formation. You know the market will be selling from there, and you're targeting this last low. You can see that. So here's the strategy I apply here too. That's the strategy I applied here. We have right there, we have our sweep of liquidity. Let me delete everything out. Now we have a sweep. We have sweep of liquidity right here. You can see that structure I did there. Okay, let me bring them back again. Good. Let me only delete this one out. Okay, so this same structure, that's what I'm trying to do here. Okay, we need to have sweep of liquidity. That sweep of liquidity, all right, which is this one here to this point. Okay, then after that, we need to have our protected high. Let me use this. That's our protected high right there, or strong high. Okay, which is this guy here, up here. All right, that structure. Then after that structure, we want to see, want to have a transactional liquidity. Market comes down and break this structure that form this sweep of liquidity structure. Okay, so once we have a break of this level, that means we've gotten our transactional liquidity. So this is our transactional liquidity. All right, there's the transactional liquidity, which is this guy right there. Okay, then after the transactional liquidity, this stuff is easy for anybody to understand. Just keep on, just watch this video over and over. You understand this stuff is very easy. You can be using this to make profits. It's like 70%. It has like 70% win rates. Okay, so after the transactional liquidity, market goes up again to give us a structural liquidity, which is this guy. This guy right there. That gives us structural liquidity. Right. So after the structural liquidity, market will come down again. This is the structural liquidity right here. This one, this guy. All right. Transactional structural liquidity. Then after that, market comes down again to give us the second transactional liquidity. From here, break this level again to give us the second transactional liquidity, which is this guy. You can see that it's aligned, right? Then after that, we want to wait to see the market comes into this level above. Once market comes above this structural liquidity into this our level, this level now is automatically our POI zone. But the POI, you don't just pick the POI, it must be the last down candlestick, last up candlestick. All right, that's our POI right there. All right, so market was playing around, tricking us, and then poof into this POI zone. And after that, we want to see a 3 candlestick formation. Though I did not confirm the 3 candlestick formation, I only used the 4 hours, the 1 hour candlestick to make an entry. We want to see 3 candlestick formation. Let me see if we have anything like that here. Okay, beautiful. So we have this. To me, we have this 1 candlestick, the second one with the rejection, then the third one with closing really strong like this without any wick at all. So if I thought it has wick, it shouldn't be, the body of the candlestick should be at least above or 80% strong, big. What I mean, this kind of candlestick, if this candlestick here was like this, that's a bad entry. That means market might go up. You see what happened? Market went up, but because this one closed without a wick, this one had to drop down immediately. Why? Because that shows that we have more sellers around this level, around this region. We have more sellers. That's why the market dropped really fast. Okay, that's why the market dropped really, really fast. That's why the market dropped really, really fast. Okay. That's why the market dropped really, really fast. Okay, so that is how we do the stuff. Now, so this would have been, I saw this on time. This would have been our entry. After 1, 2, and 3, I'll make my entry right there, and I'll target any of those levels, maybe here or any place, depending on my where the market started coming from. All right, depending on where the market started coming from. Okay, so sorry. All right, that's where I would have made my entry, but since I wasn't online when this stuff happened, I could not make entry there. Okay. Now, I've shown you the 3 candlestick formation. With time, because of time, I can't do more. But then we have market drop back to the swing level where it started coming from, the swing low where it started coming from. So we started selling from here, or SL just above the structure, and our target is supposed to be down, down, down this level. But now we are not doing that. So this way our target is 1.7. Yeah, somewhere here. That's our target. All right. That's our target. Because of this structure, this level is very strong. Around this level is very strong. So we are targeting 1.3.7 RR. Okay. So that's it, guys. That's it, guys. It's as simple as that. All right. It's as simple as that. So let me do this again. Okay. I say this is my sweep of liquidity, this level here. This was my sweep of liquidity. Let me write it out, though I don't like. A sweep of liquidity right there. Okay, yes, that structure is the sweep of liquidity. The market goes up. All right, once market sweep this place, it goes up to this level to give us this structural liquidity or protected, sorry, give us this strong high or protected high, depending on what you want to call it. So we call this strong high, okay. Strong high or protected high. Protected high. All right. Then after that, market comes down here. Take note, around this level, we want to see the last up candlestick, the last up candlestick, the last up candlestick, the last up candlestick. Around this level, on, let's say, on the lower time frame, like the 15 minutes time frame. Okay, because you can go down to 15 minutes time frame or even 5 minutes time frame for this setup, but I'll advise you stay on the 15 minutes time frame. So now, our last up candlestick, where is our last up candlestick before the massive move? Here is our last up candlestick before the massive move. That's it. That's our last up candlestick before this massive move. You can see this move. And again, there should be imbalance here, fair value gap, okay, around this level for it to really go well. All right. So this was our last up candlestick before this strong sell. So this is that shows that we have the institutional the institutions around this level. So the move will be really strong. All right. So look at that. All right. Let's go back to 1 hour time frame for the purpose of this video. All right. So now here we have the last up candlestick before the massive move. So you now come and pick the last up candlestick, which is the bullish candlestick, and you drag it forward. You drag it forward. All right. Now, market has given us protected high, comes back and take this place out. After taking this place out, here is now our transactional liquidity. Transactional liquidity. All right. The market goes up after creating a transaction. Market goes up to this point and give us what? Structural liquidity. Market gives us structural liquidity right there. So here's our structural liquidity. Let's name it. Remember, this is our POI. Okay. This is our POI right there. Then this guy here is our structural. That's our structural liquidity. Here's our structural liquidity. The market comes down again after creating the structural liquidity. Market comes down again to give us the second transactional liquidity. Gives us a second transactional liquidity. So we have two transactional liquidity, one structural liquidity, one sweep of liquidity. All right. Then after the last, this one here, market comes in to this point. It breaks, once it breaks this level a bit into the POI zone. All right. Into the POI zone. What do? This is your entry. You wait for the 3 candlestick formation around this level, 3 candlestick formation. All right. Sorry. So 3 candlestick confirmation. mean entry confirmation, which is three candlestick um, confirmation. Sorry, three candlestick formation is our entry confirmation. All right. So take note of that. That's where you're making your entry, and we make profits. All right. That's where you make your entry right there. You wait patiently, and where's your target? Here is your target. This level here is now your target. This level, because the swing will complete here. So here is your target. You're making your entry right here. After the confirmation of the three candlestick, you can screenshot this or watch this video over and over. All right. You're selling from there to this point. All right. Now, where is your SL? Your SL must be above the structure, this structure here, above the candlestick formation. All right. So you need to stay on the lower time frame, like the 15 minutes time frame, to make that entry. Your entry should be above the candlesticks, that's the structure of that three candlestick formation. All right. So let me show you again the kind of candlestick I'm talking about you should use. Let me go to the 15 minutes time frame. When markets want to reverse, it will start printing weak candlesticks, weak candlestick. Let's say we are about to buy. You see a strong candlestick into the demand or support, whatever you call it. Then there's a rejection. The second candlestick rejects. All right, and the low comes below, like the tail comes, comes below the previous candlestick. The first candlestick comes below the previous candlestick. Then there is it closes like this. Then the second candlestick open. Look at this candlestick, open and closes like this. Then the wick of this candlestick, the wick above should not be the wick should not be, the body of the candlestick should be at least up to 80% of the entire candlestick, from the high to the low. The body of the candlestick where it's closing, the closing price level should be at least 80%. You can see this very candlestick now, this is up to 80%. This other side now is just like 20%. So that's why the market went up. Even with that, you can see there was a pullback before the move. So in this way, it's hard for it to flip account, to open multiple positions and flip account. So the purpose of this strategy is for you to flip account. Let's say you want to flip $100 to $1,000 or more. This is the strategy you use. So, but then in this situation, if you want to flip the closing, this candlestick, this one now should close properly, should close at least 90% to almost 100%, just like the one that we entered, this one here. I mean, I saw it when it started happening on the 15 minutes time frame. You can see we had this one. We have this one printed, the strong bullish candlestick into the supply. Then we have this one with a high above the previous candlestick, and it closes like this. Look at this one. Look at the closing price of this very candlestick without any wick, very tiny wick, almost nothing. You can see there was no pullback at all. The market started dropping. So this way you can flip accounts comfortably. You can flip accounts comfortably. So yeah, that is it, guys. That is it, guys. So that is how to flip accounts, and that is how to make trade. So that is the strategy I use for this signal that I gave to my guys. We are in good profits. And again, I don't just give signals. I do not just use only this strategy. I had to combine my key levels to understand that the market is actually into that key levels, and it will, because of this key level, it will definitely reverse. Okay, so that is it, guys. I think the video is too long, but thanks. If you watched this video to this end, please drop a comment if you've learned anything from this video. Thanks so much, and also check the description box to join the free Telegram channel to chat me up directly if you want to learn how to analyze the market, how to be profitable, or you have any issue you want me to assist you with. That's fine.